Good morning, Dr. Anwar. My name is Yong, and today I will present my comparative analysis titled Public Bank versus Public Islamic Bank in Khartoum. In this presentation, I will compare the difference between conventional vehicle financing offered by public bank and Islamic vehicle financing offered by public Islamic bank, particularly in terms of financing structure, ownership, governance, and customer sustainability. The purpose of this comparison is to understand how two banks under the same banking group provide vehicle financing using different financial principles. Although both public bank and public Islamic bank belong to the public bank group, they serve customers with different preferences. Public bank provide conventional hire purchase financing, which is interest-based. Meanwhile, public Islamic bank provide vehicle financing I, which follow Islamic Sharia principle through Al-Ijara Tuma Al-Bay. This comparison is important because it helps customers choose financing based on cost and need, financial structure, and personal preference. First, let's look at the background of both institutions. Public bank was established in 1966 by De Hong Bill and is one of the leading conventional banks in Malaysia. It provides many financial services such as deposit, loan, insurance, wealth management, and vehicle financing. Its car financing product use a hire purchase arrangement, where customers repay the finance amount through monthly installment including interest. On the other hand, public Islamic bank start operation in 2008 as the Islamic banking subsidiary of public bank group. It provides Sharia compliant financial product and serve customers who prefer ethical and Islamic financing. Its vehicle financing follows the concept of AITAB, meaning leasing followed by sales, where the bank buy the vehicle first and ownership transfer after installments are completed. The core structural difference between these two products is the financing relationship. For public bank, the structure is a debtor-creditor relationship. The bank provides financing as a loan, and the customer repay the amount together with interest. In contrast, public Islamic bank use an asset-backed lease and sale structure. The bank first purchases and owns the vehicle, then leases it to the customer under AITAB. Therefore, public bank focus on debt-based financing, while public Islamic bank emphasize asset ownership before transfer. Another important difference is interest rate versus profit rate. Public bank earn income through interest charge, which are added to the repayment amount. However, public Islamic bank avoid riba on interest because it is prohibited under Islamic law. Instead, it's earned through a predetermined profit rate, which is clearly stated at the beginning of the contract. Ownership also differs. In public bank, the customer purchases the vehicle using finance money while the car acts as collateral. For public Islamic bank, the bank owns the vehicle first and leases it to the customer. Ownership only transfers after all installments are fully paid. In terms of governance, both banks are regulated by Bank Negara Malaysia. However, public Islamic bank has an additional Sharia committee which ensures all products comply with Islamic principles and avoid prohibited elements like riba, gara, and asil. Late payment charges. Both banks impose charges, but in public Islamic bank, these charges must follow Sharia guidelines and are meant to encourage timely payment rather than generate excessive profit. Each financing product has its own advantage and limitation. Public bank hire purchase financing is simple, familiar, and easy to understand, making it suitable for customers comfortable with conventional banking. Meanwhile, public Islamic bank vehicle financing I is Sharia compliant and more transparent, making it attractive to customers who want ethical and faith-based financing. However, Islamic financing can be slightly more complex because it involves leasing and ownership transfer arrangement. Therefore, customers should evaluate affordability, repayment period, fee, and personal value before choosing. In conclusion, both public bank and public Islamic bank help customers achieve the same goal, which is vehicle ownership. However, they differ in financing principles, ownership structure, profit generation, governance, and ethical foundation. Public bank represent a conventional interest-based model, while public Islamic bank represent a Sharia-compliant AITAB model. Finally, neither option is universally better. The best choice depends on the customer's financial situation, preference, and religious consideration. That's all. Thank you.